Hey guys, David Robinson here. Welcome to the apartment investing journey. We've got another great episode for you today. I've got someone that has a tremendous amount of experience in commercial real estate, multifamily, and ground up development, as well as some value add. And I think he's going to have a lot to share with us today. And so I'm excited to have Venkat. Venkat, you gotta help me with the last name.
Avasarala.
Okay, here we go. I'm excited to have Venkat Avasarala with me today. Venkat, thanks for your patience as I work through pronouncing your name, but I'm excited to get into your journey and your story. You have a lot to offer to our listeners today. So I appreciate you coming on and spending a few minutes with us.
Thanks for having me.
So Venkat is based out of DFW, and he's a multifamily operator and ground-up developer with over $500 million in assets under management in DFW, as well as Austin, Denver, and the Phoenix markets. And so, Venkat, if you don't mind, our podcast is all about the journey, and so we'd love to hear sort of your backstory and how you got into the space, maybe some of your background, and then we can talk about what you're focused on today.
Absolutely. So, folks, I'm born and brought up in India. Did my bachelor's in electrical engineering back home. Came here to do my master's degree back in 2002. Went to University of Alabama in Huntsville, Rocket City, to do my master's over there. And after I'm done with it, I couldn't find an entry-level job in electrical engineering because all those jobs went to Asia. So I was hiring, so I ended up in IT. Started my first job with ADB in Roseland, New Jersey. Then did a couple of years in Halliburton in Houston. So that is when I came to Texas back in 2004, September. So after that, worked 6 years at PepsiCo and then 6 years at Bank of America before I gave up my IT job altogether. And basically, I was at a point where I had to choose, do I really want to straddle between these IT and real estate or just pick one because it's just getting too much to handle. So that was my, IT journey there. But from the real estate standpoint, 2007, once I bought a home and settled down, because I was doing consulting, right? So I was going from this end of the country to that end, quite a bit of travel and all that. So finally, when I bought my home and settled down in DFW, that is when I focused on real estate because I know that I'm going to live there, live here, and then I want to acquire some property. So ended up buying about 20 homes, 3 homes before the recession in 2007, and 8, 9, 10, 11 didn't do anything. 2012 is when the wholesaler stopped calling me. And I knew that the market has turned because they've been bothering me in 8, 9, 10, 11, and I was scared. I was like, okay, man, I got 3 houses and I don't want to buy anymore. Mortgage, real estate was not cool words to speak of back in those days, right? So 2012, when these folks stopped calling me, I clearly see that there's something happening. So I ended up buying 17 properties, all around the rim of 635. These properties never stay vacant. I mean, I have some very long tenants and I manage them myself because I tried hiring property management. I was just not getting good service there. It's hard to attract and retain tenants if their needs are not met in a timely fashion. So I took it on myself. So I was managing them myself. I had a group of trusted vendors who I just text and then they go provide the service. And then whatever the bill is, they don't call me to confirm the amount or anything. They just provide the service. It's all based on trust. So the tenant texts me, I text them, and then they go provide the service and send me an email with invoice. And I put a check in the mail over the weekend. Right? Nobody talks to anybody. That is how I used to provide same day service for all these properties. And that's that's thanks to my vendor pool that I have and the trust we have between us, right? So we did that. And then I quickly ran out of Fannie Mae spots, right? So before 2008 recession, there was no limit on how many homes you can have. I mean, they would fund 100 homes if that is what you want. But what happened in 2008, a lot of pain was actually caused by investors because they took on 105% leverage loans. And first sign of trouble, they all walked away. More so true in Phoenix, Vegas, Florida, and some aspects of California. These are the trouble spots. But Fannie Mae said that, look, we're in the business of improving homeownership. We're not in the business of helping you build your empire. So you're done. You're done. After 20, you're done. And then I don't want to take these portfolio loans and all that. And I figured that the scaling is very slow with these single family properties. A lot of work, but not so much return to show for. I mean, everything I was buying at the time, if it wouldn't cash flow 15% on day one, I wouldn't buy. We were spoiled back then. But by 2015, end of 2015, what we saw was that wasn't happening a whole lot anymore. So then I switched to commercial real estate. I pivoted rather to commercial real estate. And as you know, commercial real estate, I mean, it takes a lot of money to buy them. So I started with a 100-unit property in a small town called Norman, Oklahoma, where there's a university and everything. And I needed 1.2 million for that. So I went and raised it. Not exactly friends and family, but these are people that, that I know over the years, right? So that is the start of my commercial real estate career. So that was a 100-unit property, then went into Phoenix and bought 120 units there. And you might wonder, why are you buying everywhere else except for DFW? Because DFW is a very hot market. Doesn't matter whether I live here or not. If I don't have a track record, they wouldn't even give me a 60 units. And I tried for 6 months and nothing is working. All these brokers are nice. I mean, but my LOI goes all the way to the bottom of the stack. I mean, I could imagine that. And it's like, look, something got to change. So I went out of my market to prove my track record. Track record in the sense like, look, the only brokers only care about, I mean, you're a broker, you can relate to this thing. Will you do what you say that you're saying, right? Can you raise money? Are you savvy enough to arrange a loan? And if something happens, are you a reasonable person to work with so that we can get the transaction done? And everything that we do and say is in good faith. Or are you going to keep your end of the bargain? That is all they care about. But once you go out and close a couple of deals and say, okay, this guy is okay, right? So I started Dallas with 300 units. Right? My very first deal. The same broker who wouldn't give me 60 units about 7-8 months before suddenly felt comfortable giving me 300 units. And I didn't look back and started buying one after another. So 3,500 units basically is what I acquired in existing apartments, mostly in DFW. And the business was good all the way until COVID. And then what happened is like, even if you see the BNC tenant is the one who is hurt the most with what's happening right now, right? Whether you call it the job losses due to the pandemic, the shutdowns and everything. The person who has a white collar job, I mean, he's working from home, right? He's having fun of it. I mean, the best time of his life, right? A little bit of a vacation. He's making more money. He's working from home and he don't know where to spend this money. He's going buying NFTs, cryptos, luxury goods, whatever, right? So that dawned upon me, right? Look, there are two Americas here with our wealth inequality and all that. It's just systematic, right? Nobody can do anything much about it. But if I look at my BNC class tenants, the crime spiked, right? People stealing each other's assistance checks, and then they become handful. And I saw the writing on the wall. It's like, okay, this is the time. Okay, we had from 2016 all the way to 2020, but this is the time I got to exit. So basically, I sold last September 2,600 units, everything I have in DFW, and just got out of it, right? Classy apartments. And now I'm predominantly focused on three things right now. Number one, I do value add. But I no longer do that in state of Texas, even though I live in Texas. And the reasoning for that is, I don't know what happened. Texas is used to known for cash flow, but that all changed around 2018, 2019 time because property taxes started going up like there's no tomorrow, right? We don't have state income tax. So schools and all these services are funded primarily by property taxes. And the assessments start going through the roof. For example, let's say you pay $100,000. They used to assess taxes on $60,000. They know that you paid $100,000, but they used to assess taxes on $60,000, $70,000. So 60 or 70 cents on a dollar. But I don't know what happened in 2018, 2019. They're saying that they start with like okay, I know that you paid 100, but let's start the bidding at $110,000, right? Then you sue them, then you settle something around 90. It's not the same. And my rents are not going at that kind of clip. And
Right.
then this Armageddon of the weather events, right? I mean, we have flooding, hurricanes, tornadoes, wind damage, and now snowstorms in Texas. So insurance rates started going through the roof. When I started business in 2016, my per door used to be around 200 a unit per year insurance costs, and then a 25K wind and hail deductible. By the time I exited BNC class, I was paying something like 750, 800, and I've heard much worse, like 1100 and all that. And 3% deductible. The problem is that 3% deductible on a $30 million property is $900,000. Who keeps that kind of money around, right?
Yeah.
Waiting to get hit by hail. So I just said that, look, this is just not making any sense anymore. Producing any kind of cash flow is like squeezing a rock to get some water out of it. And business shouldn't be this hard. And I just didn't feel any comfortable staying in this Texas BNC class deals. So I'm right now doing whatever I can get in Phoenix and Denver. I like those markets because of very low expense ratios. I mean, the expense ratios are like 30% with 50% break-even occupancies, higher rents, proximity to California. And thank God Gavin Newsom got reelected in his recall election so that he can send more people to us. I was rooting for him, actually. So not to get into politics, but he is our friend. I like the proximity to California where all these states are there, bringing wealthy people with some good jobs coming and settling down in these Western states. So I like that story there. So that's why I'm buying there. But Texas has its own strengths, right? The cities are easy to work with. Getting a piece of land zoned in a reasonable amount of time is very common here. And when you build something, nowhere in the country you can lease up a 300 unit property faster than you can do it in Dallas, period. Absorption king, right? So I'm trying to avoid holding properties in Texas and avoiding the problems of Texas, but playing it to the strengths, right? So I got into land development and ground up development. So land development is where I buy like 50 acres, 100 acres, and I want to grow that to 1,000 acres or 2,000 acres one of these days. But slowly I started with 50 acres and I did 124 acres now. But the idea is to buy some raw land, take it through city, put zoning on it, and then replat it and sell the pieces that you don't want and hang on to the multifamily piece and build on it, do a vertical on it in a separate project and invite the investors from the land over to here. Give them first right of refusal. And if you're short, you can go raise a little bit more money. And ground up development, even if I can find some multifamily zone land at reasonable price, I would just go and buy it and do some vertical ground up construction also. So that is the way to play Texas strengths at the same time, avoiding the weaknesses of Texas, which is high taxes and high insurance and relatively lower rents.
So, well, first off, thank you for a great synopsis of your background and, what you've done in the past and what you're focused on today. I want to dive into a couple aspects of it, and then I want to talk specifically about what you're focused on today. Sure. Back when you started, getting involved in single family, you tapped out what you could do from a single family perspective, and then you moved in to multifamily. You bought your first deal in Norman, Oklahoma, 100 units, and you went outside of your market to be able to develop a track record. Why do you think, and I think this is an important observation for listeners that are struggling to get some traction in their local market, why do you think that strategy worked for you in going outside of your market to win a deal, developing a little bit of a track record, and then coming back into your market?
Yeah. So I kind of, it's in my nature to try and put myself in the other person's shoes, right? Empathy, right? And what I have seen these people is these are the brokers, right? That who were showing my properties to me and all that, but somehow is not getting awarded any deal. Even price I offered is equal or even sometimes few tens of thousand higher. A bigger amount of down payment. So it just dawned upon me that, look, these guys just doesn't know me. So they don't know what to think about me, right? Because I was just getting started. And they're not going to ask you all these questions, right? Okay, how many deals you have done, how much money you raised, and all that, right? So we need to give them that comfort. They're not there to do an interrogation for us, but
Right.
all these things are running in their mind. Why? Because even by 2016, what's happening is that market became so good that people were questioning is like, at least some, right? Hey, why do I need a broker when people are actually sending me these offers, directly, right? Or why do I need a broker, right? Well, broker's job is to make sure that you advise the seller and vet all the people who are involved here and make a recommendation and make sure that the deal closes in the first attempt. If it goes to the second attempt, it's a ding on the broker's reputation, which they are like really, really interested to protect, right? Because they have to grow their business and all that. And so with this thing, they cannot take chances. Lots at stake here, right? It has to close. You have to help seller identify the best party. Well, I don't have any track record, right? I mean, I have a bunch of single family homes, which I cannot carry that experience over to commercial real estate. So, well, what do you do then? So you go to places where the standards are a little lower, right? So that actually I can get things going on. And believe it or not, Phoenix is red hot right now, arguably the number one market in the country. But back in 2016, it was nobody. I mean, I got a 120 unit off market awarded to me. And at the time, the only experience I had was that 100 units in Norman, Oklahoma. But apparently that was good enough, right? Crazy times, right? I mean, how things change.
So do you think, well, obviously Norman, Oklahoma and Phoenix different than DFW, right? So yes. Would you say that, and was it an intentional strategy for you to go in maybe more a cooler market, less competition? Okay.
It was very, because I started looking for these properties around November of 2015, but 6 months is a long time, right? Yeah. I mean, nothing's happening. I'm not even getting invited for best and final and all that. So something got to give here, right? Yeah. And they won't tell you that. The brokers are just too nice and they cannot tell you that. Look, man, I don't know who you are. I don't trust you, right?
But being able to come back to them after you had acquired the Oklahoma deal and the Phoenix deal, say, hey, I've closed on 2 deals. All of a sudden, their ears perk up and they say, all right, Venkat might be able to close a deal here.
That's it. And it didn't take very long, actually, right? I mean, as soon as I showed the track record that I put the properties under contract, I raised money, I arranged loan, I closed it, and I did what I said I would do. And that's it. That is all they're looking for, right? Yeah. And they want to sell you, right? They want to sell you. They want to help you build your empire, but they need some evidence. And that is exactly what I did by making a conscious choice of stepping outside my own backyard, do those deals and come back. And then, and the rest of the way, I just bought in gas.
Yeah, I think that's a great observation for those that may be struggling to get a deal in a local market that they're in where it's a hot market and a lot of competition. Great advice there. I want to move on to another topic here, which is the 26, I think I heard you correctly, 2,600 units that you sold in DFW that were generally B and C class assets. Is that correct?
That is correct. Yeah.
Okay. So, and generally speaking, what was the time frame for you selling 2,600 units?
We listed in February of last year, right after the for the most part the moratoriums are done, right? And we were waiting for that to end so that we can get out of that space. Because look, this is what I know. Last time in 2008, we lost 8 million jobs, and they did so much after that, right? They threw so much money, quantitative easing, reduced lens and all that. It took like 4 or 5 years to get all those jobs back. And still, several markets are fully recovered, but there's still about 3 to 4 million jobs that we are yet to recover, right? And we are 2 years into the pandemic. And this is after they're spending unprecedented amount of money and just giving practically everybody, if you have a pulse, they give you money, right? It's like, take it. It's a loan, by the way, you don't have to pay back, right? I mean, just think about all the craziness. Who knew that they would do all these things, right? But even then, we didn't recover. And what dawned upon me is that, look, all these job losses and everything, this will be concentrated on this B and C class tenant. And again, I just put myself in their shoes and said that, look, if my life is not good right now, right? Even before COVID, right? There is income disparity and people are stretching to pay rent and buy necessities and all that, right? Wages were not growing for a while. So if my life is not good, how can the person who's serving me, his life will be good? Because his life will be good as long as I'm good and I'm paying on time and he's paying his bills and everything. But what we saw during COVID was a lot of craziness, right? So first of all, the crime spiked. When the desperation sets in, the crime spikes and it's inevitable, right? And when I say crime, I'm talking about like, people stealing other people's assistance checks. And we had cameras everywhere. And they got so sophisticated. They have something where they can just open all the mailboxes at one time. Like the frame comes off, and then you can quickly go through, just like a postman would. We were amazing with this resourcefulness of these tenants, and we're just watching at this, right? How do you stop that, right? And then the crime, right? The gun violence.
So what I want to hone in on this topic is, what the process of selling 2,600 units. How many assets was that?
That's 9 assets.
Okay, so 9 assets, 2,600 units, all within a period of time, a year.
See, what happened is we listed them, and we are getting ready to blast. But this particular broker has connections, and he brought a portfolio buyer. And so then we are looking, and what he said is, look, I know that you got BOVs, send them over, and I'll do my underwriting. If I can, I want to just pay you the BOV price so that you don't have to go on a price discovery mode. And February of 2021 is not exactly where things are red hot like they are today, right? Quickly, things change between February and let's say May, June-ish time, right? Sure. So we were like, look, we do want to get out of this B and C class space. So definitely have to consider that, right? It's a repeated buyer, have demonstrated several times that he can take a big portfolio down and all that. So we went ahead and awarded under a condition that they buy all our properties at the BOV value, and they have to assume all our loans. We put some long-term loans, Fane loans on these properties. So they checked all the boxes for us, and we went ahead and get it done.
Interesting. And so moving forward, and you alluded to this a little bit, that you are still interested in value add deals, just not in Texas.
That is correct.
In Texas, to avoid the challenges that you described, you're focused on land development and ground up development. And talk to us a little bit about outside of Texas, outside of Dallas in particular, what markets are you focused on as far as acquiring value add opportunities?
So the only 2 markets I'm doing deals over the last 18 months is Denver and Phoenix. Okay. Just those 2. But I'm open to other metros in Arizona and Colorado.
And are you changing the asset type? Because you focused on B and C class value add in Texas. When you're focused on Denver and the Phoenix market, are you changing your asset class?
Not really, right? As long as 70s, 80s properties, I'm willing to buy there. And here's the reason why. The rents are high. The rents are high in these places. Let's say my latest acquisition was a 71 unit off market, who we bought it from a single family broker in a town called Lakewood, Colorado, right? It's built in 70s. Last time that property traded was in 1995, a mom and pop operation. And here's the dissection of the deal, why we bought it, right? The rents were $1,700, right? And it gives you a 50% discount for renting versus buying the lowest price property over there, because the property prices are like anywhere between $500,000 to $600,000 in nearby. You don't get that kind of situation in Texas. Housing is cheaper in Texas, right? So especially if you go to the 60s, 70s properties, you can buy a very nice home, 70s property, a very nice one, for let's say even today at 200, 250, right? Not 600. Right. So what happens is I can attract a tenant who makes $100,000 or more, but that's not enough to buy a home. So
And
I can get that kind of tenant.
1,700 in rents, that's got to be what, at least a 3 bed, 2 bath unit? Or is that
Not
a
really. No,
really?
two bedroom.
Okay.
Yeah.
2 bed. All right.
Like Lakewood. And here's the reason why this is the beauty about the Lakewood, right? So Lakewood is a suburb of Denver, wedged between Denver to the east and mountains to the west. And it's a landlocked, it's a city, and they have 6,000 federal government jobs there, highest concentration of federal government jobs outside Washington, D.C. Then in July of 2019, the voters got together and put a moratorium on new development, a perpetual one. So you cannot grow the inventory by more than 1%. Applies both to single family and multifamily. And no, you figure out what's going to happen next, right?
Yeah.
So there will be a genuine scarcity of these, and look at the location. Yeah, you swing 5 miles to the east, you're in Denver, go work, come back, come home, change your clothes, and then 5 miles to the west, you're in mountains, go hiking and all that. It's a very lifestyle thing, very cool thing. So these are the places where I want to own for a longer time, because I know that they will appreciate, because there is no supply risk over there. And these are the kind of decisions. So even buying a 1970s property, 1,700 rent, it's okay. Actually, 1,850 is the rent that we have set for 2 bedroom. Wow. You don't get these in most of these metros.
Incredible. Yeah.
Right? So Phoenix is, it's just, the rents are growing so rapidly, like, because that market got almost crushed in 2008. Yeah. And that trauma is still in people's heads there. So they're not approving anything. So now we started to see some supply, but nowhere close to the demand that has, right? So when you even before COVID, they were getting 10% rent growth. So that gives you a lot of cushion, right? Margin for error and all that. So, but at the same time, Dallas was getting 2%. 2%. My expenses are growing at 10, 15% a year, and my income is going 2%, right? So it just didn't make any sense. So Phoenix, I'm much more open-minded in going into that. The properties I'm buying is in 80s right now, but I'm willing to do even 60s, 70s only for Phoenix because of that breakneck rent growth that they're having.
And so let's talk then about the development side of things. As you're sourcing opportunities, value add opportunities in the Denver and Phoenix markets, generally speaking, and land development opportunities with both land development and ground up development, the distinction there being buying larger plots of land, going through the city and zoning and replatting those, and then the ground up development being actually you taking it and going vertical. What's harder to find right now as far as deal flow is concerned? I can imagine that it's challenging, and nonetheless, in Dallas to find development opportunities. So where are you spending the majority of your time based upon what you think is the greatest opportunity?
I'm spending 90% of my time on development, ground up development and both land development. And it was never this hard to find land, either zoned land to build multifamily or raw land to develop it. It never was an issue before COVID, right? Not in Texas. But now Dallas has grown so much over the years. Now we are 7.7 million population in the metro. And soon we're going to eclipse Chicago to become third, largest metro in the country. And I think another 1.4 million people is going to come and call DFW their home by the end of the decade. Where are we going to put them, right? So we definitely need, and our occupancies are like 97% right now. So there's not a lot of product. If all these people show up tomorrow, we'll be in a big trouble. We have to put them under the bridge. So there is huge development opportunities right now. But now if everybody wants the land at the same time, obviously the prices increase, right? Just look at what happened to toilet paper, right? Everybody decided that, we got to buy toilet paper as soon as the COVID hit. And now they're selling a 50-cent roll for like $20, right? And black market and all that. So this is what happens when supply demand goes out of the whack. And that is exactly what's happening to the developable land also, right? So Dallas start to show the issues of a large metro, like let's say a Boston or Chicago or something. I mean, these are the headaches they have. I mean, it's impossible to find land. And that has started to set in. And coupled with the fact that 10 years back, if you go to city and say that, look, I bought this 10 acres corner lot, can you please spot zone it to multifamily? And they say, okay, you got it, go build it. Now they're not going to do that no more, because now they're asking, if you want 10 acres of multifamily land, what you really need is 100-acre raw land. Go develop it and put some single family retail and that and this. And yes, as part of that, I'll give you your 10 acres. So now what happens is the supply will reduce. The supply will reduce. Who's going to, I mean, it's hard to find people who's willing to take down and do all that work to just get that 10 acres land. So now we are all looking to buy zone multifamily land, right? So the price I have seen has like 2x, 3x, 4x just during the last 2 years period. And it's becoming challenging. But so that is where I spend my time to locate land for my ground up projects and also land development projects.
Well, this has been a great conversation thus far. I wish I could keep you for a lot longer here, because this has been an enjoyable conversation. I think you have a lot of insight. I do want to start winding down here and be respectful of your time. But I want, real quick, before we start to wind down, I am curious about the building of your business. And what I mean by that is, acquiring 3,500 units in multifamily is no small feat, right? What has been the key components to your success as far as building a team that has helped you to be able to go and acquire 3,500 units?
Yeah. So again, it's like, how do I say this? The first thing is, look, real estate is a team sport, right? It's not rocket science, but a lot of things have to come together. A lot of people have to help you get where you need to be, right? I'm talking about the vendors, investors, partners, and the whole 9 yards, right? So it's what really helped me is, like, my last job was with Bank of America, and before that it was with PepsiCo and all that. So I picked up a lot of skills, soft skills, right? And also how to present opportunities, how to build relationships. Don't think everything in short term, always think everything in long term. These are the kind of things. So basically, in long story short, I think I'm better how to talk to people in simple words, right? So that really helped me, where I was able to work with several people on a repeat basis, rinse and repeat kind of thing, right? I'd never do a deal with a partner and say, okay, we're done. No. All the partners I worked with, I have done multiple deals. So I would say that is the single most thing which helped me, where I'm able to convince people to work with me on a repeatable basis. And then you'll gain momentum, and then 3,500, 35,000 doesn't make any difference. It's all the same.
Yeah, love it. That's great insight. Well, look, I want to start winding down here. The first question I've got for you before we do is, what's the biggest challenge that you're facing right now in your business that we could all learn from?
So the biggest challenge is, again, like I said, right? I mean, finding opportunities where you can make the pie bigger. Because right now, if you go buy something on market, let's say 80 C-class product, irrespective of which market it is, it probably underwrites to maybe 14 to 16 IRR. And then you give most of it to the LPs, like waterfall, 70-30s, 80-20s, whatever it is. So the pie got a lot smaller during this time. But at the same time, inflation started going up, and even by official figures, it's 7%. So I am looking for opportunities where the pie is bigger, right? Where I can create more value. And that forced me into development, where I want to put sweat equity in it. And also there are higher barriers of entry. Not everybody can do ground up development, land development. There is no gurus teaching everybody on how to do this thing. But fortunately or unfortunately, we have a ton of gurus to teach people how to buy these apartments, good advice or bad advice, but there are a lot of them. So that's why I'm looking for these kind of opportunities where I can make the pie bigger, so that I can pay my investors better and pay myself better.
Yeah, that makes a lot of sense. What's something in your business that you're just absolutely knocking out of the park right now? Something that you're excited about, or that you do very, very well, that we could all learn from?
Well, I think that, again, finding the deals, right? So right now I have a deal, and not sure if you know about the DFW, but I'm going to start a project to build 419 units in downtown Frisco. Now, Frisco is like the crown jewel of DFW. No other city can claim that it's nicer or better opportunities wise, right? Than Frisco. But I got in 2 years of my development career, I found my way into doing a project like that. And the next door neighbor is Sam Zell, Equity Residential. They own 80,000 units REIT, and he's a $6 billionaire. He was worth $6 billion. Well, that's the next door neighbor, right? So I really feel like blessed that people are working with me and giving me these kind of opportunities to be part of, and investors coming along with me, because all these deals take a lot of money and I get oversubscribed all the time. So I think working again, I'm going to go back to the working with people. I think is working really well for me right now, where I was able to find opportunities and fund them, execute them, and all that.
Love it. Well, Venkat, this has been an enjoyable conversation. I appreciate you coming on and sharing a little bit about your insights into, what's gone on in the past in the market, why you decided to, sell your portfolio of B and C class multifamily in generally the Texas market, and why you're focused on value add in Phoenix and Denver, and also doing development deals in Dallas. And congratulations on the Frisco 400 unit development. It sounds like that'll be a great project moving forward. What's the best way for our listeners to connect with you and learn more about what you have going on in the future?
Sure, they can email me at Venkat, Venkat, at Stryker, STRYKERPROP.com. They can call me at 281-727-9238.
Perfect. We'll have that info in the show notes. So if you want to connect with Venkat, go into the show notes right now, click on one of those links. Venkat, again, thank you very much for coming on the show and sharing your journey with us, and we look forward to connecting with you again soon.
Perfect. Thank you, sir.